Ladies and gentlemen, Korea-Africa Business Financial Seminar will start shortly. Please turn to channel 1 for Korean, channel 3 for English simultaneous services. Ladies and gentlemen, welcome to Korea-Africa Business Financial System. I'm Lee Jong-gil from Korea-Africa Foundation, and I'll be your MC for today's seminar. And the Africa Continent Free Trade Zone is now being implemented, and thanks to the Free Trade Zone, Free Trade Area launch, we are now going to have one of the largest market in the world, and Africa will emerge as one of the most dynamic economic region in the world. And in this seminar, we are going to talk about the African business opportunities, up-to-date trends in Africa business environment, and how to support the Korean companies who are interested in starting their business in Africa. It is co-hosted by Korea Africa Foundation and law firm Yuhan. I would like to thank everybody for joining us today. And we're going to have two sessions today. The first session will talk about how to utilize the financial systems in doing business in Africa, what kind of financial support our companies can receive. And in the second session, we are going to talk about the African legal and financial systems. And we are going to talk about the systems that can actually be very helpful in the area. And this seminar is being live streamed on the Korea Africa Foundation channel on YouTube. So please use the simultaneous interpretation receiver. And those of you who are joining us online, please click the interpretation button at the bottom of your Zoom screen. And we are also going to have a Q&A at the end. Before we begin the seminar, we would like to first invite Ambassador, the President of Korea Africa Foundation, Ambassador Yeo Eun-gi, for opening remarks.
Good afternoon, ladies and gentlemen. I will take off my mask and begin again. Hello, everyone. I am Ambassador and President of the Korea Africa Foundation. I'm very pleased to meet you all, and thank you so much for coming all the way to Busan. Once again, my special gratitude goes to all the participants joining us at Korea Africa Business Financial Seminar. And also, my appreciation goes to the host and the participants joining us virtually. Especially today, we are very honored to have many African ambassadors to Korea, including Zambia ambassador to Korea, Simusa, who came all the way to Busan in spite of their busy schedules, minister counselor, and also other embassy officials. Thank you so much for joining us today. And also, we have speakers who plan to give us a great insightful information, Deputy Director Byun Sang-hyun from K-Sure, as well as Director Kim Yoon-hee from Export-Import Bank of Korea. Distinguished guests from home and abroad, as you are well aware of, last year, the African Continental Free Trade Area, AFCFTA, entered into implementation phase. Africa is now playing the role as creating a special casting vote on the international stage in various fields as a production base that supplies major resources to the world. And economic and financial fields are no exception to this. In fact, in in order to revitalize Korean companies' advancement into Africa, it is very important to understand the financial system of each African country, and reliable financial support is indispensable. When such business-friendly financial system is in place, Korean companies' full-scale investment and advancement into Africa can be facilitated. From that regard, I believe today's seminar is very meaningful. Throughout the seminar, we will analyze the overall economy and also come up with the economic prospect for the African continent. And in keeping up with the recent international situation, we'll report economic trends in Africa and the policy and financial system to revitalize entry into Africa for Korean companies wishing to advance into the market. In addition, by effectively responding to various legal issues that may arise in the process of using these financial systems, in the future, we will further strengthen our company's ability to advance into Africa. Through this, it is expected that this will be a meaningful time to once again reinvigorate our company's interest and vitality in the African continent, the world's last land of opportunity. Domestic financial and economic related organizations such as Export-Import Bank of Korea, Korea Trade Insurance Cooperation, Korea South African Chamber of Commerce, and South African APSA Bank joining us today as speakers are strong supporters in pioneering the way for Korean companies to advance into Africa. In particular, I'd like to express my gratitude to Korea South African Chamber of Commerce and Industry and the South African APSA Bank for taking active steps to develop not only Korea South African relations but also overall economic cooperation. Last March, the fifth Korea Africa Forum was held in Seoul, and in May, also Africa Week was held, at which newly appointed Foreign Minister Park Jin mentioned that the upcoming 2024 Korea Africa Special Summit is now being planned. Ladies and gentlemen, distinguished guests, Africa is no longer a distant continent far away from Korea. Africa is no longer just a place where we provide assistance. Rather, Africa's status has been upgraded and is now regarded as an economic cooperation partner. In the area of economic peace, security, and culture area, we are collaborating, and we must prepare the necessary readiness to start a full-fledged journey for the win-win prosperity in Africa's economic blue ocean. Policy, finance, and legal experts have come together today, current status and future of economic cooperation between Korea and Africa. And also we'll be discussing various matters and practically provide necessary information for Korean companies, which will be a great help in devising and developing a new economic cooperation strategy. Last but not least, thank you very much to all the participants as well as the staff members who prepared today's seminar. And once again, from deep my heart, I want to express gratitude to members from the African embassies and also bank. Thank you so much for joining us today. I hope that today's seminar can provide a platform and opportunity for Korean companies to recognize the African continent as a new stage of activity. That concludes my welcoming as well as opening speech. Thank you.
Thank you very much, Preston Yeongi. Now we are going to invite His Excellency Wilbur Samusa, Ambassador of Zambia to Korea, and also the Vice Dean of Africa Group of Ambassadors for congratulatory message.
I shall also take off my mask. I'd like to begin by wishing everybody a good afternoon. And as I speak today on behalf of the Africa Group of Ambassadors as the Vice Dean, I wish to express distinct pleasure and honor to be participating in this Korea Africa Business Seminar here in this beautiful city of Busan. I wish to thank and appreciate the Korea African Foundation, or CAF for short, President Ambassador Won Kilyo, and other CAF members of staff who have taken this initiative and making a big effort to convene this business seminar. I wish to acknowledge also the presence of all your excellencies, ambassadors, representatives of all the embassies here present, and I acknowledge all the financial institutions, businesses, and everyone who's present today at this business seminar. And finally, let me give a special note to all representatives of the city of Busan and the Busan Foundation for International Cooperation, Friendship Association. I think the Vice President is here, I believe, and other representatives. Let's cut it off. Sorry, my apologies. For indeed, I'd like to take a note for all the representatives of the city of Busan and the Busan Foundation for International Cooperation for making possible for all of us to be here this afternoon and for hosting us in this very wonderful and beautiful city of Busan. Busan is known for its harbor infrastructure, and also it is the harbor for international finance next to Seoul. It is therefore very fitting that this business seminar is held here in Busan. Now, the environment and timing is better than ever for pursuing business opportunities between Korea and the continent of Africa. The creation of the Africa Continental Free Trade Area, the AFCTA in short, which was alluded to earlier by Mr. President of CAF last year, incorporates the nation of Africa with a combined population of over 1.4 billion people and a GDP of over $2.6 trillion, and it has created one of the largest and most attractive markets in the world. Late last year and early this year, the Ministry of Foreign Affairs of the Republic of Korea, together with the Korea Africa Foundation, with the participation of the Africa Group of Ambassadors, AGA in short, and dignitaries from Africa, held the 2021 Seoul Dialogue on Africa under the theme Rethinking Solidarity, Korea-Africa Partnership in the Interconnectivity Era. Now, this dialogue was supposed to have been held as part of the 5th Korea-African Forum, along with the Korea-Africa Business Forum. However, due to concerns, the forum was delayed due to concerns over the spread of the Omicron variant. This dialogue was held in a hybrid format with online participation of overseas speakers. During this interaction, and it was graced by First Vice Foreign Minister, it was hoped that Korea and Africa would forge a partnership for co-prosperity in various fields, a mutually beneficial economic partnership in terms of diversifying global supply chains for raw materials, and also a people-centered partnership that will expand not only high-level exchanges, but also youth exchanges through government scholarship programs and vocational training. And now today, not so long after these significant Korea-African events, we're having yet another Korea-Africa Business Seminar, again being facilitated by the Korea African Foundation, CAF, which will be dealing with economic outlook and finance systems in Africa. All these efforts go to show that Korea and Africa are important partners with opportunities for mutual benefit. I therefore urge all of us who are participating in this seminar to engage fully and to effectively assimilate all the material that will be presented for possible consideration and action. On behalf of all here today, I wish to commend and thank all the presenters that will be presenting this afternoon for all the well-prepared presentations that will be presented shortly. In conclusion, I wish to acknowledge and appreciate once again the Korea African Foundation, CAF, for organizing this Korea Africa Business Seminar, and the Busan City and also the Busan Foundation for International Cooperation for organizing this year's Busan Familiarization Tour, which has brought all of us here to the beautiful city of Busan. I wish all present here this afternoon an effective interaction and a successful business seminar. Thank you very much.
네, 일버 시무사 대사님의 축사 감사드립니다. 다음 순서는 이어서 단체 사진 촬영을 하겠습니다. 그래서 귀빈 여러분께서는 무대 위로 올라와 주시기 바랍니다. 단체 사진 촬영.
Ladies and gentlemen, we are going to start the first session on economic outlook and financing system of Africa. In this session, we are going to be hearing from two experts who have a lot of expertise on Africa. The first speaker is Director Kim Yoon-hee from Export-Import Bank of Korea. In 2001, he joined the bank, and since then, he has been involved in various projects related to Africa, and he has also worked as a team leader of Africa in EDCF. And recently, he's involved in projects for overseas market development, has been supporting Korean companies overseas. Please, we are going to invite Director Kim Yoon-hee, and he will talk about how to support Korean investors in Africa.
Good afternoon, ladies and gentlemen. I'm Director Kim Yoon-hee from Export-Import Bank of Korea. I am very honored to be here today in this beautiful city of Busan to introduce you the trends and strategy for investing in Africa using policy financing. I sincerely hope that my presentation is helpful to all the participants and also the economic cooperation between Korea and Africa. I believe that my presentation can contribute. So let me begin my presentation. I'll be covering 6 areas during my presentation. From the number 2 to number 5 are the most important things. I'll be introducing these four important financial products. First of all, let me briefly share with you the current status of the trade share between Korea and Africa, as well as composition of foreign loan balance of Export and Import Bank of Korea. You can see on the left the trade between Korea and Africa from 2016 to 2021. Regrettably, the trade share is merely around 1%. And it's quite regrettable, but on the other side, there is a huge potential for further growth. Export and Import Bank of Korea, you can see on the right column the composition of foreign loan balance. As you know, Export-Import Bank of Korea, our major clients, or we work very closely with companies that have advanced into mostly Asia, Europe, Middle East, and also North America. Now, regarding Africa, the percentage of the composition of foreign loan balance is 5.4%, and there's a huge portions that goes into gas pipeline in Mozambique. That's why it's 5.4%. From now, I will introduce you four financial products that Export and Import Bank of Korea provides. In 2019, we have introduced a special product called separate account. And in case you advance into Africa in order to get a loans, there are a lot of challenges, especially African market is an untapped market that not many Korean companies have abundant information, and Export and Import Bank of Korea weren't able to provide sufficient loan, and Korean government and Export-Import Bank of Korea came to conclusion that we need to work together to provide a separate account so that companies who would like to advance into African continent can provide help. So I'd like to introduce a case or a couple of cases. So the first one is, for example, there's a company A, which is an exporter of a plant worth $100 million, which is huge, and the importer hopes to repay the export contract price in installment payment over a long period of time after completions of the plant. In this case, the bank lended import settlement funds to overseas importers, and overseas importers used the fund to pay the contract and price in front of the domestic exporters first. So, as you can see here, we provide support for import settlement funds foreign governments or foreigners who import support product from the domestic company. So a separate account has been created and operated to actively accommodate the credit risk of African countries. And there were two cases that we have approved. The first one is Export Import Bank of Korea provided financial support to Korean company called Daewoo ENC Nigerian LNG plant project. The second one was Export Import Bank of Korea provided fund to Hyundai Rotem's Tanzania Railway Vehicle Supply Project. In case of Nigeria, Korean company Daewoo worked together with the foreign companies to build LNG plant project. Regarding this project, Import and Export Bank of Korea, together with the K-Sure, the Korea Trade Insurance, we provided support. And total of $337 million was provided as a financial support. Another case I'd like to introduce is Rotem's Tanzanian Railway Vehicle Supply Project from the Dar es Salaam area, which is located in the offshore, all the way to the onshore. They're trying to build a new railway, and the trains that goes to this railway, this project was given to Hyundai Rotem. Total amount is about 300 million Korean 300 million US dollar, and Tanzanian government needed fund for this. So Export and Import Bank of Korea, together with the Korea Trade Insurance, we provided loan, and the period or duration was a 14 years of repayment. And Rotem, as soon as it send the material, it will get paid. And Tanzanian government, since it's a 300 million for the next 14 years, they will pay back to Export and Import Bank of Korea. Since the duration is quite lengthy, almost 13 to 14 years, the burden was much less than they thought it would be. Now, next one, I'd like to share with you the separated account, a case of direct loan support in front of the African government. This is Angola case. Let me introduce what this case was about. In the center, you can see that there's agricultural machines and equipment like tractor, and these machines were used for uh, harvest or for the agriculture industry. And Export and Import Bank and Commercial Bank signed a loan agreement that was about $100 million, and the Ministry of Finance of Angola and Korean company signs an export contract with the Angola Ministry of Agriculture. So Angola's Ministry of Finance, they have applied for a loan, and we, the Import and Export Bank, pay the amount. In this case, you can see on the left or on the right side, you can see that whether it's Export and Import Bank of Korea or Korea Trade Insurance, the total amount that can be provided always comply with international contract, which is about 85% of the total contract amount. So in case of Angola, we provided 85% of the loan, and in case of the remaining part was paid by the commercial bank of foreign country. And Angola government agriculture ministry was able to purchase the agriculture machines and equipment. In case of the Tanzanian case, the railway of Angola was the one who signed the contract, and in order to pay that money, Tanzanian government and also the Export Import Bank and Korea Trade Insurance, they have signed the agreement and also a contract to provide fund, and they pay they were supposed to pay the export fund. You can see here once again, Export Import Bank of Korea, Korea Trade Insurance, both of these agencies will loan the money until 87% of the total amount that they need. In most of the cases, commercial bank, they know fairly well the government and also the financial system. They're well aware of that. That's why they take part in. And APSA Bank, who is going to speak today, and here under the APSA Bank, and there was another bank, and that took part in this. So the separated bank account, if you'd like to utilize this, there are a couple of conditions that you have to meet with. For example, first, this separated account is provided to those companies with very low credit. And if the country's credit is lower than the B plus by the Moody's, S&P, and Fitch, or usually we have an overseas research institute under the Export-Import Bank of Korea, and it individually evaluate the credit. And number one and number two, either one of that is met, then a special or a separated account financial product can be used. In case of Export and Import Bank, if you get access to our homepage, you'll be able to see all the credit rating. In this product, we are providing funds together with the government. So there are a couple of principles that must be kept. First, contributing to the industrial development of a specific overseas region by constructing industrial facilities or infrastructure and supplying materials or services. and also to promote the economic exchanges with trading partners by allowing Koreans to participate in export of overseas investment activities. And now there are key elements that you need to consider in selecting the candidate partner. And not only this, there are two conditions, but also other elements that must be carefully reviewed. First is about the credit rating. The credit rating must be lower than single B. And what does it mean? It means must be a country that has the credit rating. For example, there are countries that has no zero credit rating. Libya is a credit rating is a zero. They don't have any credit rating, and you can only transact with a country that has the credit rating. And in some cases, IMF and World Bank, they are under a tight control of these countries. So, for example, it must be a country where only concessional funds are available, or on the other side, non concessional borrowing is not allowed. A certain country, or there must be a granting limit on non concessional borrowing line, or once again, there could be some limitation on external debt. So they have these strict rules and regulation, and as the credit rating company, there is a requirement that we must be comply with this requirement. For example, in case of Afghanistan, you know the non-consensual borrowing is prohibited. In that case, the separated account cannot be provided as a financial product, and these funds, well, it's not sort of a beneficiary fund, but rather interest rate is not below 1%, but the interest rate follows the international interest rate standard. So it's similar par with the market rate. And only the countries that accept these can be partner. So in order to use this separated account, you have to undergo a couple of application process. First, together with the Korean exporters and to the relevant organization, conclusions of the export contract must be signed. And also after signing the export control, all the necessary elements will be determined, including the product price. And also exporter or the importing nation, they will be discussing about the loan approval application process. When it's done, then in the case of the sovereign borrower, a resolution by the National Assembly or National Debt Committee may require in some cases. And when the bank's internal credit committee includes the speak National Assembly or the highest decision-making process or internal credit committee, then you have to make sure that with the given agreement elements, you have to undergo the internal process, and then you will be submitting the process, and we have several process, but the highest decision-making body will deliver this matter and come to conclusion. And based on that, decision will be made by the bank steering committee. We call this as a steering committee, and then a participation in each government departments and related organization. So I believe that this financial product could be quite interesting to the African ambassador. Next, I'd like to introduce to you a very unique financial product, which is real lending financial product. Well, I believe that this part, the real lending financial products information is helpful to all the Korean companies planning to advance into the African continent. Please look at the slide. On the left column, you can see the direct loan or general finance. And for example, Export and Import Bank of Korea, we directly lend money to the Korean companies. Re-lending means that usually a foreign bank is a go-between these two. On the right column, you can see Export and Import Bank provides loan to the local area, and then this local bank will lend money to the local clients. And in our case, we don't deliberate the credit rating of the go-between, but we only address this loan based on the credit rating of that company. So when the local uh, players ask for the loan, then it will be determined by the local government, and then the risk will be shared. So this is a very unique structure. And if you would like to know more about it, I will explain the case study later on. The first one is about real lending and how the real lending can be used. It can support for export transactions of the Korean companies. I'll give an example. Here, there are two animations. The first one, the gentleman wearing eyeglass is exporter, and he's currently having a discussion with the importer, and he's asking a question. So you need to pay the funds, but you don't have enough US dollar, so what should we do? In that case, they can get financing from the local government and then from the local bank, and then the support for import settlement funds can be given to the foreign local companies. And in some cases, the foreign currency or US dollar is not abundant, or the interest rate to be paid for the foreign currency is really high. In the case, the importers in importing the product they wish to do that, the burdens will be very heavy. In that case, export and import banks credit can be used. So we provide the funds to the foreign banks located in certain area, and then foreign banks in certain area can lend the money to the companies, and then the exporters will be able to receive the funds. And this is a structure that goes on, and under this, export can use this system to expand their base. Next, I'd like to help your understanding. This is about support for overseas business of Korean companies. So facilities in front of the overseas Korean companies and operations of the investment support. This is the Vietnam case. It's necessary to expand the factory of the local subsidiary established in Vietnam. And then I think it would be difficult to borrow from the domestic bank, or a parent company's credit rating is low. Is there any other way? So this was question, and usually what they do is loans to overseas Korean companies, facility operation investments fund. Then a local Vietnamese company has been able to raise facility funds in timely manner without the joint guarantee of the parent company. And usually they take care of the loan payment guarantee and would like to minimize any risk or influence to the mother company. And if there are any dangerous or risky influence, then instead of relying on the mother company, the local subsidiary may visit the bank where it imposes a credit limit and then explain the situations, such as we are operating the plant in such and such area, we need to expand it, and how can you help us? And that kind of discussion must be thoroughly be held, and then you will be able to eventually get the financial loans. The foreign currency that the local banks give to you is actually coming from us. Within this range, the local banks is actually transacting with the Korean banks or Korean companies. Next. This could be a little bit difficult for all of you to understand, and there were a lot of cases, so let me elaborate. If you look at the bottom animation, let me explain what this is about. There is a local sales cooperation in India who is currently selling home appliances under an annual contract with a large retailer. It is difficult to expand the scale of the local sales because the supply and demand of dollars is not smooth. Is there any solution? In that case, the company can utilize the funds that we provide. But let me touch upon this. So there is an overseas local company that purchases goods and services from overseas Korean company want to get a loan, and as the local distribution procure the purchase funds on favorable terms, local sales increased and partnerships with distributors were strengthened. For example, there's a Samsung Electronic, but Samsung Electronic Vietnamese office would like to provide the product, and if there's an Indian company would like to purchase from this Samsung Electronic Vietnamese headquarter, then in the past it wasn't available, but now it's available. The funds will be able to be provided. So the global value chain, Korea is now a member of that, and we produce not only in Korea but also in various places, and even the purchaser they can get loans from the re-lending product of Export and Import Bank. The benefit of re-lending financial product is as follow. It's possible to recover export process early, and loans are available on favorable terms, much better than that of the local bank. And since the transaction is based on the credit of the overseas local bank, there are three things that shouldn't occur. First is no exporter credit or replies required. And second, even if the importer fails to repay the payment, the export is not responsible for repayment. And even if the case of a loan in front of the local cooperation, most loans can be made without joint guarantee of the parent company of the head offices. So there are pros and cons, and whether it's being paid or not for the exporter, there's nothing, no requirement for exporter to be responsible for repayment. And another point is that when local company try to borrow the money, then a joint guarantee or parent company burden is not required. So the re-lending financing product, if you'd like to use that, there are procedures that you have to follow. There is a re-lending financing team under Export Import Bank of Korea. Please make sure to consult with this team, and they will let you know which bank you can work together. And after a phone consultations with the person in charge of the re-lending finance department, for example, they will say, go to ABC Bank in Kenya, we have a credit line, and go to ABC Bank and tell them they'd like to use the re-lending financing product of Export Import Bank of Korea. And then between the local ABC Bank and the exporter, they will start the consultation. Now, the also there's another process that the local customs or buyer to proceed with the loan consultation with the local bank, re-lending bank where the credit line is set. Then internal review of whether the re-lending can be made or not will be reviewed. If the re-lending bank intends to handle the loans, then lending bank will request the loan approval, and then approval will be given. What you are looking at right now is the current status of re-lending limit. set out by the African Bank. There are two banks in Egypt, and Bank Misir and National Bank of Egypt. So the limit is around 300 million. And in Nigeria, Janice Bank, about 70 million is the limit. And the other two banks, it doesn't belong to a certain country, but rather they are a regional development bank located in the African continent. African Exim Bank and Trade and Development Bank, there is a 100 million limit, and Trade and Development Bank 200 million bank. Exim Bank, yes, there are numerous members, and I have written down the name of the countries like Egypt, Nigeria, Zimbabwe, Cote d'Ivoire, and Uganda. They have the offices in Nigeria. And Afri-Exim Bank operates their own offices in these countries that I have mentioned. In case of Trade and Development Bank, this is East Asia Development Bank. So it was East Africa. So these countries are Mauritius, Burundi, Kenya, Zimbabwe, Ethiopia, and they have their own offices here. And when you discuss with these banks, tell them that I really want to buy this product, but I don't have enough money. I feel that I have insufficient money. Then how can I do that? So start consultation with that. And at the same time, I recommend that you consult with the Export and Import Bank of Korea to get this re-lending financial product. Next one, I'm sure that you are fairly well aware of this one, which is the performance type guarantee. We provide support for the performance type guarantee. It is a guarantee of performance necessary for receiving orders for export transactions, important imports for the national economy, or implementing overseas projects. And there are many different kinds of the guarantee. Whenever there is a need, then please make sure to contact our Export and Import Bank of Korea to use these products. Lastly, I'd like to share with you the systems that we have introduced. We are providing support free of charge for the investigations and bidding necessary for small and medium-sized enterprises to enter overseas market. But in order to enjoy this service, you must have the relationship with our bank. When I say relations, means that you must work with us. When a medium-sized or small-sized company would like to advance into the African continent, then you need to understand the laws and regulations or the labor law or tax law of a certain country. You need to investigate and gather information. There are a lot of things that you must work on. Instead of you directly gathering these informations about the laws, you need to find a consultant company, and then this consultant company can find the information and provide you report. In that case, we support 50 to 70% of the money that you have to pay to this consulting company to investigate together information. So 300 million won will be the payment amount, and to medium size is about 50%. It's not that every single contract we provide support, but rather we receive application, and once on a quarterly basis, we host the investigation committee meeting and we evaluate, which truly requires our support. And those companies that receive high grade or a grade evaluation, we provide these services free of charge. This one is an example that we have called for the project. If you look at our homepage, once or twice a month, we call for the project selections. And on the left column shows the notice that there is a bidding held, and on the right column shows the name of the company that were selected. And May of this year, 5 companies were selected: Kobico, Cheongshin INC, Iris, Patek, Bijan. These 5 companies were selected, and 50 million is the minimum amount, and 100 million won was the highest amount that we have provided. Seongsin INC, I believe, is actually located in Busan. So I have explained to you the four financial products, and this chart shows the support that Korea Export-Import Bank provides. The first, when a Korean company exports goods to the African government or receives construction contract from the African government, like G2G, you need to utilize separate account. Second, when an African company needs to import needs import payment in a transaction the Korean company exports to African company, then make sure you utilize re-lending product. And when an African company requests various guarantees in relation to the construction carried out by our company in Africa, then use the performance type guarantee. Last but not least, when a Korean company needs research and analysis service to explore the African market, such as discovering new export transactions and overseas investment and winning overseas business order, use the investigation and bidding service. Now, this chart shows the offices located throughout Korea. If you would like to gather information about performance type guarantee, make sure you contact Busan office, which is located in the city of Busan. And second, in case of the separated account or investigation bidding process support, please contact the divisions that I work for. And in case of re-lending financial product, make sure to contact re-lending department located at the Export and Import Bank of Korea. And next, any questions or information you'd like to gather regarding making advancement into the African continent, or the informations that you cannot gather, or you'd like to hear the voices of the relevant officials, you can see that there are three offices that we operate. Dar es Salaam in Tanzania, and second, Ethiopia, Addis Ababa, and third, Accra in Ghana. That's where our offices are located. The purpose of these offices are they open to carry out EDCF, but also export financing and credit. You can go there and discuss about that. So whatever needs you have, please visit them and ask for the help. That concludes my presentation. I tried to explain a lot of contents within very short period of time. I hope you were able to learn a lot. And if you have any questions or if you need extra information, I have written down my contact information. So please contact me. Thank you.
Thank you very much, Director Kim Yoon-hee from Export-Import Bank of Korea. Now we would like to invite Deputy Director Byun Sang-hyun from Busan office of Korea Trade Insurance Corporation. He will talk about trade insurance system for Korean SMEs in African market. Mr. Byun is an expert in trade insurance, and he has been responsible for various functions of Korea Trade Insurance. Currently, he is the head of Busan team of Korea Trade Insurance. Today, he is supporting Korean companies in Africa. So please welcome Deputy Director Byun. Good afternoon. I'm Deputy Director Byun from Korea Trade Insurance. It's a great honor for me to introduce you to our corporation and the products that we offer for Korean companies. Today, I'm going to talk about what kind of trade insurance support the Korean companies can have in doing business in Africa. But before that, let me introduce you to Korea Trade Insurance Corporations because many people are not familiar with the functions, rules, and responsibilities of our corporation. We are a public export credit organization under the Ministry of Trade, Industry, and Energy, and we have supported 30,000 Korean companies. And we have provided 196 trillion won of financial support out of the 30,000 Korean companies. Well, 99% of them are small and medium-sized companies. Those of you who are watching us on YouTube, I believe many of you are from SMEs. So what I'm will be talking about today will be very relevant to a lot of SMEs. So what is a trade insurance? Insurance are to protect ourselves from accidents or other uncertainties that could happen in the future. So it's something that we use to hedge against the future risk. Basically, when there is a car accident, we subscribe to car insurance. For material loss, we subscribe to marine, shipping, fire insurance. For human casualty, we subscribe to life insurance or casualty insurance. But then what about transaction risks in trade? That is why our corporations have been established. Then what kind of risks does a trade insurance cover? What kind of risks are there in foreign transactions? First, trade insurance covers two types of risks. First is credit risk. Second is contingency or emergency risks. First, credit risk. It talks about the other party going default or bankrupt or refusing to make the payment or unable to make the payment. Well, trade transactions are basically credit transactions, and you have to wait until a certain period of time for the payment to be made. But you have already shipped your products to the importers. But on the day of planned payment, what if the payment is not delivered to you? That's where trade insurance comes in. Second, emergency risks cover non-commercial risks such as war, the Ukrainian war, or other types of war, or other contingencies. And regarding importer bankruptcy, there was a well-known case in the US. It happened a long time ago. There was a home appliance retailer called Circuit City in the United States. And Circuit City suddenly went bankrupt in 2008. And many Korean companies were hit by the bankruptcy of Circuit City, but those companies who had trade insurance with us, actually, many of them benefited from insurance premium from our corporation. And this has successfully made them tide over these difficulties. And regarding the emergency risks, in 2018, temporarily, there was a relatively high currency risk in Nigeria, and there has been delay in allocating foreign reserve from Nigerian central bank that has delayed the opening of letter of credit. And from the trading company's perspective, they are not getting the funding they need to produce the next batch of products. So our corporation made the payment in advance, and our corporation worked with Korean embassies and Nigerian central bank and worked out all the problems and made the payment safely delivered to the company so that they could produce the next batch of products. So trade insurance covers the credit risk, the risk the other party is not unable to make the payment, and emergency risks like a war or unexpected contingencies. Let me briefly introduce you to the trade insurance system. Many of the companies who are here today, I believe, are small or medium-sized companies. So I'll try to focus on what kind of support we can provide for mainly the small and medium-sized companies. First, let me talk about the steps of export. and talk about what kind of function trade insurance provides for each step of the way. Of course, there will be a contract signing, and then products will be produced, and then products will be shipped, loaded on the ship. And because of this period of credit, during this credit period, in order to gain cash, the companies will sell this LC to the bank, and negotiation collection will take place. And on the payment day, payment will be received. And if there is any problem, the after transactions will take place. For each step of the way in the contract signing period, you have to identify or check the credit rating of your foreign partner, especially companies who are doing business in Africa or Latin America. This step is very important, checking the credit level or credit rating of your partner company. We work with 77 affiliate organizations overseas so that we can find out the most basic information about your partner, the environment, business environment of your partner, also the credit rating of your partner company. Based on that information, we can provide short-term export insurance services. And after you have checked out the credit rating of your partners, when you're producing the goods, you would need some initial funding, and we are going to provide the initial funding as part of export credit guarantee. So this is happening before the shipping takes place. And to get the bank loan, our corporation can provide the collateral for a bank loan. And after shipping is made, then for credit risk and emergency risks, we provide short-term export insurance. And then during the credit period, in order to gain cash liquidity, we provide the negotiation and collection so that you can have cash liquidity. Last but not least, if there is any problems in getting the payment, then we will provide you with the insurance premium. But even if you have not signed a insurance, we are going to help you collect the unreceived receivables. So in the initial contract signing phase, you will need the credit rating check for the partner companies. I have briefly talked about this, but we are working with 77 overseas credit rating agencies, including DNB. On average, it takes 10 to 15 business days to come out with the credit checking results. And to do that, you can also make the application through our cyber sales branch. And in the credit rating report, first you will be able to see this kind of report. This is the sample format of our credit check report. So you will first have a credit rating of your foreign company. A to F is a normal rating. Sometimes they can have temporary difficulties, so they might have relatively low credit rating, but G and R are highly irregular ratings, and it will have very limited transactions. So you should be cautious about those partners with GNR rating. And you can also find out the background information of the country that you're doing business in. And then you will also look at the history information of that company working with other Korean companies and whether they have made the payment on time or if they have any record of having gone default on some of the payment. And the most important information in this report would be if there has been any insurance accident. And those companies who are just starting their business in a foreign country would be most interested in this piece of information. From 2015 to 2018, there was a lot of difficulties in trade transactions. It's using stolen identity or identity theft. So you have to meticulously compare the information. If the information match or mismatches, you can prevent this kind of problems for 80% of the case. There was a cosmetics manufacturer in France, and that cosmetic manufacturer suddenly has received an order asking shipment of construction material to another country. So that's weird. And this has led to a fraud because this company did not check which company has made the order. This company had no idea that the customer was a pharmaceutical company and did not ask why they were asking the shipment to be made to a third country, and they did not go through the trouble of communicating with the person in charge of placing the order. They only communicated through email. So this case includes everything that could go wrong. When you look at the credit rating or credit checking information, the importer would sometimes change the names on the email. So you have to check each and every number and the alphabet letter, especially when you're doing the first transactions. And if the buyer wants the shipment to be made to a third country, especially out of ordinary business areas. So in this kind of case, you should be naturally very suspicious and check one more time. Even if you do all the necessary checking, some people might still be deceived. So in 20-30% of the cases, this kind of problems can occur, and that's when our company can give you some assistance. Short-term export insurance. This is something that can happen after the shipping has been made. In this short-term export insurance, in the case of identity theft, if the exporter has done nothing wrong, then the exporter will receive the insurance premium. The short term here means payment within 2 years. But for payments beyond 2 years, as the previous speaker has mentioned, it belongs to mid and long-term export insurance, and we have that product. But today, since we are mainly talking about small and medium-sized companies, I would like to focus on short-term export insurance functions that we offer. As I've mentioned in the beginning, if the export contract is made within 2 years and the payment is made within 2 years of signing the contract, then if the 100% of small and medium-sized companies will have their loss covered by our insurance. This is the schematic diagram. Before you make the shipping, the most important thing is you need to buy the insurance before you start shipping. So when you're making the shipping, you would be notifying us what time or what day you will be making the shipment and on what day the payment is to be made. That's how insurance can be signed. But after the payment date is over, you are not getting the payment, or because of a Ukrainian war or any other war, you are faced with some challenges. And that could also lead to soaring exchange rate risks. In that kind of case, we can cover the loss. This is the most basic schematic diagram for short-term export insurance. The characteristic of this insurance is one-on-one. When buyer A is working with seller A, you have to sign for one export insurance, and you have to sign it and sign another insurance when you're dealing with another importer or another exporter. So it's one-to-one transaction. This could be manual intensive. So on the next page, we have also launched SME Plus insurance product. The biggest difference between the previous one and this one is that you can have a pool of buyers pooled in one pool. So you can have multiple exports for one insurance product, but the coverage amount would be relatively small. But for this relatively small insurance, you don't have to go through the cumbersome process of having to sign export insurance every time you're dealing with new buyer. Another important thing here is that recently, for small and medium-sized plus insurance, the principle is to just to cover the credit risk. The previous insurance, short-term export insurance, covers both the credit risk and emergency risks. But this SME Plus insurance only covers the credit risk. So you might want to sign extra contract for the credit risk. In the case of Africa, even though I'm not an expert, in the case of Egypt and Tunisia, regarding IMF relief funding, they've had some issues, so they have had their credit ratings adjusted. So for certain importers around the world, you have to deal with higher emergency risks. So it's safer to buy additional insurance products for importers' emergency. This is highly detailed procedure. It talks about what kind of services you have to pick and choose for each circumstances. Basically, you can have up to $1 million covered for SMEs. Another point, there are certain countries that we cannot cover with relatively high risk, with very little possibility of having payment made, and Ukraine has been added to this list. If you're exporting to Ukraine now, there is higher probability of not getting the payment. So you have to know about the risks. So for this kind of export destinations, we cannot provide you with the coverage. This is the insurance premium rate. And if you are a small, medium-sized enterprises, you will get discount. So it's within 0.5%, both for the importer risk and credit risk. So that was before the shipping starts. But after you sign the contract, and then you have to start producing the products or purchase the products in Korea. And this is the product that you can use. This is still before the shipping. This is called export credit guarantee. When the exporting company needs financial support to gain the raw materials or to proceed with production of the products, then our corporation or financial institutions with our guarantee can provide you with the financial assistance. When you are producing certain products for export, you might have to import certain raw materials from overseas. In that case, when you visit bank, you would ask for a loan, and then they will introduce you to trade financing. And trade financing will look at your export performance for the previous 2 years, and the Bank of Korea has manages the ceiling for trade financing. And when there is a ceiling offered, our company issues the guarantee papers for you within the ceiling amount, and you can take the guarantee document to the bank, and the bank will give you the loan. And let's talk about after shipping. In the contract signing, you will be checking the credit level of your partner when you're making the shipment. There is before shipping, you have to sign up for short-term export trade to cover the credit and emergency risks. And after you make the payment, during the credit period, you have to look for ways to make up for the shortage of cash liquidity. And that's when export credit guarantee can come into play. First, the overview of this product is very simple. Most of the transactions are TT transactions these days. And in the case of TT, when you have acquired TT, but if the payment is not made on the due date, then the bank will send that request to the importer because the exporter has not made the payment. And we'll ask the importer to reimburse, and then our corporation will make the reimbursement on behalf of the exporter. This is a short-term product, so everything should happen within 2 years of signing the contract. Then nothing special here, but one thing that I should note is that it is often offered in connection with the short-term export insurance. If the importer does not make the payment, then our corporation will reimburse the bank, and the final liability will belong to the exporter. But if you have already signed up for short-term export insurance, you will receive insurance payment from the corporation. So there will be no remaining liability because this insurance will be offset with your liability. So you will be able to continue to trade without any impediments. This is after shipping has been made. If you don't want to sign up for short-term export insurance, you can also sign up with another service called guarantee assurance. As for short-term export insurance, it's one-to-one transaction, so it's rather cumbersome and manual intensive. But after shipping, there is another slimlined or streamlined transactions, and it's called export credit guarantee. Within a certain ceiling amount, you will be able to trade with multiple importers. And when you are doing transactions on credit, this product is highly recommendable. Let's say there is a big buyer and the transactions are focused on one or two buyers. So this product is excellent in that scenario. But if you have multiple importers, and in order to liquidify this bond, this export credit guarantee is more convenient. So if you're using within $5 million, then this inclusive acquisition using export credit assurance or guarantee is excellent. So you have to buy this product from 국민 신화 하나 우리 농협 or Busan Bank. As for the details of this service, please visit our homepage or one of our branch offices. This is a service that has received a lot of attention from our companies. It's called exchange rate hedging service or the exchange rate insurance. There has been a lot of fluctuation in our exchange rate. And especially exporters who are working in Eastern European markets, they are very vulnerable to exchange risks. So they are signing up with these services. It covers US dollar, euro, Japanese yen, and Chinese yuan. It does not discriminate any country, but it will just look at your previous year's export performance. So that will be used as the basis for your determining your ceiling amount. And within the ceiling amount, if you give us the proof of your previous record, then we will set the ceiling amount. So this is just like other exchange rate hedging insurance. Let's say this is the desirable exchange rate, 1,120. But if the exchange rate goes up, you will have more benefits than as an exporter. But since you have gotten the guarantee, you have to return this surplus to the corporation. But when the exchange rate goes down, you will suffer a loss, and that loss will be reimbursed by our corporations. So the exporter will be able to have a stable exchange rate on 1,121 guaranteed so that you can hedge uncertainties in the future. I will explain the details on the next page. There are three types of products: general, exchange rate, options, and limited range. This is the most popular product. This works very simple. When the exchange rate goes down, the insurance will pay you for the loss, but if you have surplus, you will return that to the corporation. And as for importing transactions, it's the opposite. When the exchange rate goes up, then the corporations will reimburse you for the loss. But sometimes companies do not want to return the surplus to the corporation, then they can sign up with this product with options, put spread options and put options. But this might sound too good to be true, but the insurance premium is very expensive. So this first product is most widely used. Some companies choose ones with options, but you will have to pay a lot of insurance premium. So you might have to really think hard about whether this really is worthwhile. Basically, this general products, the blue product is most widely used. So far, I've talked about our corporation's system and products. Credit risk checking, short-term export insurance, and shipping before and after shipping. On top of those products, we also offer non-financial services in cooperation with the city of Busan, or this is the support, financial support for insurance premium. Many of the SMEs actually receive this benefit. As of 2021, 45,000 companies has received 81 billion won of support. So you might want to work with KITA or the Agricultural Association. So various organizations have signed special contract with our corporation to offer financial support to SMEs. Many local governments offer these services as well. This city of Busan, so we are in city of Busan, so let me talk about Busan. Even though I have not written down here, the city of Busan offers special support to those companies whose export amount is less than 2 billion won. The amount of support is 2.5 million won, and this is called collective insurance. So the city government allows all SMEs within the city to sign up for these insurance products. In June of this year, many local governments have renewed their collective insurance, and more than 5,000 SMEs, even if they have very small amount of export amount, they will have they will sign up for this insurance automatically. So any company located in Busan, of course, other local governments have this collective insurance services as well. So any SMEs that is making any kind of export, even if they fail to receive the payment from their buyer, they can receive the financial support from K-Shore, Korea Trade Insurance, or the local government and ask for insurance premium. So we inform you about the procedure for signing up for this contract and how much support you can get through emails. This is export consulting services. Korea Trade Insurance has a dedicated team for providing export consulting services. From the very start, signing the contract to any suspicions over identity theft or any difficulties in carrying out the transactions, please visit our homepage and click this Trade Sure Consulting homepage. Thus, click this button. So sometimes you work with KOTRA to identify your trading partners, and that's when you start work with K-Shore for consulting services. This is K-Shore Research Center, and it will give you the high-level country information. It does not have huge amount of information yet, but when you're looking for some importer or buyer information, you will be able to get some level of information. And if you visit our homepage, ksure.org.kr, and you will be able to search some brief information. Last but not least, we provide overseas receivable collection service. If you have signed up for short-term export insurance, you will be covering most of the emergency and credit risk. But if you have failed to sign up for this insurance, you can benefit from overseas receivable collection support, and we will be providing the collection support. So when the amount has been collected, you have to pay a certain percentage of that collected amount to our corporation, so we can cover the cost of legal fees and so on. This is really important. Whenever you have unreceived payment, you have to talk to our corporation as soon as possible. So according to our statistics, most of the payment is collected within 1 year of the missed payment. So you have that's when 80% of the uncollected amount can be collected. But after 1 year, you will have difficulties in having any communication with the importer. So you better talk to us as soon as possible so that you can start the recollection service as soon as possible. So today, I have talked about the trade insurance services that we provide for our SME clients. Thank you very much for your attention. I hope today's presentation can be helpful for Korean companies who are looking for business opportunities in Africa. Thank you very much.
That concludes the first session. We heard the presentation by two speakers. We are going to open the floor and have a Q&A session after we complete the second session. Either those of you joining us virtually or those of you at the physical site, please raise the question at the end of the second session. So we'll now go into the second session. The topic of the second session is about the prospect for financing system in Africa with a better understanding of its system. So, regarding the South African banking system, we'll be able to understand and how to financially support, especially understanding Africa's legal system. It will be elaborated. Let me invite the first speaker. We have Managing Executive from ABSA Bank, who will be talking about strength of South African banking system and how to financially support Korean corporates in African business. Managing Executive Naidu is joining us virtually from Africa. Premising Naidu, for the past 20 years, has been in charge of the business, and before he joined ABSA, he was in charge of engineering and exclusive investment in Citibank. I believe we are connected via Zoom. Mr. Pramasin Naidu, please welcome him.
And to all the delegates, I'd like to recognize His Excellency Ambassador Woon Ki Leo and Ambassador of Zambia, Ambassador Simusa, other delegates and distinguished guests. It gives me great honor and privilege to be here present today as part of the Korea Africa Business Financial Seminar in Busan. And my apologies that I'm not in Busan today. I was there just over a week ago, just over a month ago, presenting also to a business seminar. And I would have loved to have been there in person today, but unfortunately, due to the travel time, it was not possible. Today, I would like to talk to you about the African banking system. I will talk to you a little bit about and introduce you to ABSA. And I'll also talk to you about how ABSA and other African banks can assist your business operations in Africa. So I think with that, let me introduce you to ABSA. We are an African financial services group, and we like to take inspiration by the people that we serve. As you are probably aware, Africa is an incredibly diverse continent. Many languages are spoken. People are very friendly. And I think ABSA is a big part of the growing business environment and business opportunities which Africa presents. And today I'm very proud to be able to talk to you about some of those opportunities and also the great set of opportunities available to Korean companies which would like to engage in African business. Just a quick overview of ABSA. We have got over a century of expertise on the African continent across a number of countries, which I'll talk to you about shortly. We're one of the largest diversified financial services groups on the continent with a balance sheet size of about $72 billion. We've also got deposits in the order of about $75 billion and a market capitalization of just under $10 billion. This makes us one of the largest listed financial services groups on the African continent. As I said, we have got over a century of experience on the continent, and in that time, we have built up a number of client relationships, probably in the region of about 12 million customers across the many countries. We've got staff in the region of about 35,000 people across the continent, as well as in other countries across the world. We're a local bank in terms of our regional presence in Africa, but we also demonstrate a strong level of international expertise. I think my closing statement on the slide would be that ABSA is incredibly well capitalized well in excess of the regulatory requirements, and we're also independently funded, which makes us one of the strongest banks on the African continent. We are present in 12 countries in Africa, and I'll run through those very quickly. Botswana, Ghana, Kenya, Mauritius, Mozambique, Seychelles, South Africa, Tanzania. In fact, in Tanzania, we have two banks. It's Absa Bank Tanzania, as well as NBC, Uganda, as well as Zambia. We also have representative offices in Namibia and Nigeria. And we've got an extensive physical footprint, which covers about 9,000 automatic teller cash machines, about 1,000, just over 1,000 physical branches across the continent, as well as I indicated earlier, just over 35,000 employees. We would like to believe that we have highly skilled bankers who have very deep local knowledge of the different countries in which they are present in. And we are therefore able to offer Korean corporates operating in Africa a full service banking solution. In essence, it is all the products and services to deal with their corporate and investment banking requirements, as well as things like paying salaries, assisting in physical cash in the various countries, as well as assisting your employees in the different markets in which you would operate in Africa. We are deeply rooted in Africa, and as a consequence, we've built up a very strong Pan-African platform. As part of developing that Pan-African platform, what we've realized is that the growth in opportunity, the growth opportunities in Africa will come primarily from trade and investment of multinational corporates looking to do business in Africa. And as part of that strategy, what we have done is set up offices in the US, in the UK, as well as China. And that will then allow us to engage with multinational corporates in those geographies looking to trade or invest in Africa. So what we do then combine is local skill and knowledge, as well as a team of international bankers to engage directly with the multinational corporates. The fourth leg of our international strategy is what we call Middle East and Asia, and this is a business which I look after. I would like to say that Korea is an incredibly important part of our strategy in Asia. And that is one of the reasons I was in Korea just over a month ago to engage with various banks, various Korean corporates, as well as some of our strategic partners, like the Korea Africa Foundation, like DRNAJU, like the South African Chamber of Commerce and the South African Embassy in Korea. And that then allows us to create a very robust understanding of the environment in Korea, the business environment, the intention and the strategy of the Korean corporates wanting to do business in Africa, and then allow us to combine our knowledge on the African continent to further grow and develop those business relationships. I'd like to also provide you a quick overview of African banks in the largest markets across Africa, especially those markets where Absa does have a presence. So with that, I think South Africa is one of the largest and most sophisticated markets on the African continent. And although there are 18 registered banks in South Africa, there's really just 4 of the largest banks which dominate the banking environment. The 4 banks are incredibly well capitalized. They have a strong retail banking footprint, but they're also quite strong in the corporate and investment banking space. In terms of supervision, the South African Reserve Bank provides oversight on the banking environment in South Africa. And I would like to say that in terms of the rules and regulations, many of those align with first world standards. And in fact, from a compliance perspective, all of the South African banks are required to be Basel III compliant, which makes South Africa, apart from being a very sophisticated financial center in Africa, also very well supervised, and again, well capitalized banking sector, which provides significant strength for the overall banking sector for the continent. Egypt, and across through to Kenya, Nigeria, Ghana, and Tanzania, also have fairly well developed banking sectors. But the one thing that stands out for many of those markets is the number of active banks in those markets. And as well as the fact that they are also well regulated in terms of their various central banks. It is sometimes difficult for multinational corporates or international banks to understand the various banking sectors, which are the key and largest banks in each of those markets, as well as to understand the risk profile of each of those banks, given how many banks operate in each of those markets. And I'd like to talk to you later in terms of how ABSA can actually help you to navigate that space. In terms of the credit ratings, I think it was Deputy Director Bjorn from K-Shaw who spoke about understanding counterparty risk. And that is a key point if you wish to trade or invest in Africa, really understanding the risk profile of the counterparties that you will be engaging with. From a South African perspective, and I understand that the slide is very busy, I will just focus on the S&P Global Credit Ratings. So for foreign currency transactions and essentially foreign currency deposits in South Africa, the banks are essentially rated BB, which aligns with the sovereign or country credit rating for the government of South Africa. So in essence, the South African banks are capped at the foreign currency rating of the South African government, which is just below investment grade. However, as I said earlier, the South African banks are incredibly well capitalized, which makes them very strong in the context of Africa. Looking at some of the comparative credit ratings for other African banks and sticking with the S&P Global ratings, you will see that they are slightly lower rated in the B category generally across Egypt, Kenya, and Nigeria, which is at a B minus, which means that it's one level lower. I think also just to highlight Ghana and Tanzania. Again, as you will see, Ghana is rated depending on the strength of the banks, and it's quite varied across the different banks. Tanzania, S&P does not rate any of the banks, but Moody's does, which puts it at a B2 rating. Again, a notch lower than the typical South African banks, but where as a multinational corporate, you can take some comfort is the fact that many international banks are present in many of the countries that are highlighted, but then the South African banks are also present in those markets. So I mentioned that in Tanzania, NBC is a subsidiary, National Bank of Commerce is a subsidiary of ABSA, and then the other banks also have operating subsidiaries in those markets. Now, to help our multinational corporate clients navigate the difficult banking landscape in Africa, and it's difficult primarily because there are so many banks, because of the different risk profiles of the different banks, the different risk profiles of the different countries across the African continent. ABSA has created what we call a trade hub. And the trade hub is really to help to manage all your trade finance requirements with African banks and to enable you to facilitate your trade finance activities in different countries across the African continent. And we do this by offering a single coordination point for all of our clients' trade flow transactions into and out of Africa. So essentially, we act as a conduit between your bank in Korea and the African banks by advising and possibly even discounting LCs. And most importantly, honoring reimbursement claims. So essentially, we take away the risk of you or your Korean bank dealing with unknown banks or banks that you do not know, not comfortable with across the African continent. So the way that this concept works is that either you as a Korean corporate or your Korean bank will engage with the APSA Trade Hub. And through this Trade Hub, we will be able to process all of the international transactions, the trade finance transactions related to the importation of services or goods or the export of services or goods into or out of Africa. And as I said, we can facilitate a number of different types of transactions. For example, refinancing certain trade deals, confirmation of letters of credit, discounting letters of credit, providing irrevocable reimbursement undertakings, and various other transactions related to international trade. As I indicated, APSA would act as a conduit between you or your Korean bank with African corporates and businesses, as well as African banks. So to highlight the point that we would work with you as well as your bank to mitigate all of the risks associated with trade finance transactions. So some of the benefits of the APSA Trade Hub. Firstly, you can make use of the APSA network across the African continent. So we have a number of subsidiaries across the 12 countries I mentioned, but we also have a number of African correspondent banking partners across many of the countries where we are not present. So using the APSA network into Africa, you can deal with an entity that you know and also help to mitigate many of the risks associated with international trade finance. A big part of the APSA Trade Hub strategy is to ease business facilitation. I think we've seen over the years that there's a very strong growth in terms of the trade relations between Africa and Korea. And certainly from my visit, I've come to learn that there's an intention on both sides to grow those business engagements. And a big part of growing those business engagements comes from the easing and facilitation of trade finance, which APSA would be very happy to be a part of. I think in terms of you as a corporate, you are essentially assuming the risk or taking on the risk of APSA Bank. And as we engage with you going forward, hopefully you will learn to trust and get to know APSA Bank and what we are able to offer across the African continent. The last point that I'd like to leave you with on this slide is that there has already been mentioned in this discussion around the African Continental Free Trade Area Agreement. And that opens up a population of 1.3 billion people in Africa, about 53 different countries, and almost 90% of traded items between African countries being able to be traded without any forms of custom duties. And I think the African Continental Free Trade Area Agreement is going to substantially increase Africa trade flows within the continent. And that is going to then stimulate multinational businesses to invest in manufacturing and production facilities in the African continent. But until we get to that stage, something like the APSA Trade Hub can certainly help to ease your entry into Korea. So hopefully you would have come to realize that APSA has been very engaged with a number of Korean partners and a number of Korean corporates. And we have a full service proposition to enable Korean corporates to be able to conduct their business affairs in Africa. And those products and services which we offer cover things like transactional banking, as simple as your payments and your collections, either in local currency or in foreign currency. We help you to manage your liquidity, your cash flows within each of the countries in which you're present or operating. We assist in trade finance, as I've mentioned. One of the areas which many multinationals are very concerned about is the trading and access to foreign exchange. So in some countries across the African continent, it may sometimes be difficult to access foreign currency or to remit dividends or payments in foreign currency. So accessing US dollars is something that we try to assist many of our corporate clients with. Sometimes it is hard, but what I would like to say is that as ABSA, we are large in each of the markets in which we are present, which allows us fairly good access to US dollars to allow you to make your international payments. We have also assisted many clients over the years in terms of financing, whether that is in terms of working capital or in terms of financing CapEx requirements, your capital expenditures, to facilitate your direct investments in each of the African countries. So I think the final message I would like to deliver is that we have a number of solutions. We have sector expertise, we have local African knowledge, and we have local balance sheets which can assist you in each of those markets. I would like to maybe just talk to you very quickly about the various sectors in which we are operating across the African continent. I think there are certain growth themes that are key to understanding the African continent. The demographics, the large population, the very young population, the resources which Africa has, maybe to highlight agriculture in particular, given the opportunities to modernize production facilities, to ensure that there's food supply in Africa, but also for Africa to become a breadbasket for the world and exporting agricultural commodity products, as well as infrastructure development across the African continent, things like power, transport, logistics, as well as telecommunications. And across each of these sectors, ABSA has developed great insight and expertise to assist many of our multinational corporates operate on the African continent. We've got a long history of supporting Korean multinationals on the African continent. And maybe just to highlight very quickly a few particular examples. We've assisted a consumer technology client with letters of credit, where that client was wanting to export products into Nigeria. We've worked with 2 engineering and construction companies based out of South Korea who were awarded projects on the African continent. And we provided full banking services from transactional banking for their staff, as well as in terms of their trade finance and foreign currency requirements. We've also worked with a Korean utility company operating in Mozambique, and we've been able to provide them a number of solutions, including the financing of a project. And maybe lastly, just to talk about the rail project in Tanzania, which was mentioned previously, ABSA is a mandated lead arranger and will be providing a significant part of the financing related to that project. This is a very busy slide, but really what I want to highlight here is that across all of the African banks present in Africa, there is a deep pool of liquidity and capital that is available. Some of the larger banks on the continent, like ABSA, can support financing transactions in excess of $1 billion, but we can also finance much smaller transactions in the order of $10 million. And that is across a number of individual projects in terms of corporate financing, as well as acquisition financing, where multinationals are looking at acquiring projects. One of the areas where we are particularly strong as ABSA is in terms of our project financing capability. And across project financing is essentially to support the development of new projects or the expansion of existing projects. And we have been able to work with our sector teams, the specialist expertise that we've developed across the various teams that we have within ABSA. But we can also work with external strategic partners, like many of the export credit agencies, the development finance institutions, and the recent example of working with KEXIM and K-Shaw in Tanzania. I think one of the points to maybe highlight that's important here is that we have subscribed to environmental and sustainability and governance objectives as APSA. And in each of the projects in which we would look to participate, our ESG principles are our guiding principles in terms of ensuring the sustainability of those projects, as well as the sustainable growth of the African continent. We've assisted a number of clients in terms of these sustainability-linked project solutions, and we would look forward to growing that. I think maybe I will stop there in the interest of time, but happy to take any questions further on. Thank you very much.
네, 원래 온라인으로
Thank
이제
you very
참여
much, Managing Executive Director, Mr. Naidu from APSA, for joining us online. And we'll move on to the next presentation by Mr. Timothy Dickens from South Africa Chamber of Commerce in Korea. He is going to talk about the introduction to understanding Africa's legal system. Chairman Tim Dickens is now also the Northeast African region team head, and he's an expert in this field. Please welcome Chairman Tim Dickens.
Firstly, good afternoon, ladies and gentlemen, and a special warm welcome for Ambassador Ryu and also to Ambassador Simusa, along with all the other African ambassadors who've taken the time out this afternoon to come down to beautiful Busan, especially on a Friday. I think that's always a good sign. From my side, my name is Tim, as was introduced, and I head up the South African Chamber of Commerce in Korea. We're also the only African Chamber of Commerce in Korea. So although our focus is primarily South Africa, we're also really interested in supporting the rest of the continent in terms of promotion of trade and economic relationships, etc. For this afternoon, my task is to give an overview of the legal systems in Africa. And that's quite a task. As you'll be well aware, Africa is a massive continent with 55 different countries and legal systems that are very unique and very specific, not only from a general sort of state perspective, but even within the countries themselves, there might be very specific provincial or local regulations that might be very particular to a particular area. So from a legal perspective, I'll caveat to say that the introduction is a very broad stroke introduction to the legal systems that you might come across when doing business in Africa. And this would also include the sort of general principles as Korean companies or Korean organizations dealing with African entities, what kind of issues you may come across and what sort of organizations you may have to deal with when doing business. So I've broken down into sort of the 5 core elements, which I think are probably the most critical parts in terms of understanding what the legal market looks like in Africa. So we've got an overview of the zonal systems, and these would include the sort of what common law systems there might be, what civil law systems there might be, and also the traditional or the sort of customary laws that you would come across in different parts of the continent. The second part, and I think this is quite important, is the rule of law. Often people want to know if I'm investing, if we're heading out to that area, are our investments safe? What does the regulatory and the governmental impact have on the investments? The third part is the African Union and the legal implications of that. Particularly, I think, going forward with the AFCFTA, there might be a lot of changes across the continent in terms of ways in which the legal systems can either adapt or perhaps even collate across a number of sectors, which will make it easier to do business. The fourth one then, general principles which you'll come across doing international transactions. And finally, this is the last one that hopefully you never have to have, is when there's a dispute. You know, what one can expect if there's a dispute, or at the last hurdle, what you can expect in terms of the outcome and the support that will be given to you. Now, I know earlier the colleague from Keisha, Mr. Byung, mentioned that, you know, it's essential to do your background checks on the companies that you're working with, which I think is almost like a marriage, so you want to know who your partner is that you're going to marry. From the legal perspective, I think this is the sort of family. It's the sort of one package comes all. So inevitably, if you're doing business with a company, they'll be based in a country, and that country will have laws that are applicable to your labor issues, your tax issues, if there are any fair trade issues, the ESG issues. So it's very important to understand the legal system and the legal requirements for where you are going to do business. So in terms of the first portion, the overall sort of broad stroke spectrum of legal systems that you'll find across Africa, I've sort of broken it down into three major ones. So one is the general customary laws, which one will come across, and this sort of references the indigenous laws, which have sort of been passed down through generations, not really statutory based, and a lot of these laws will be, particularly in terms of inheritance, maybe civil disputes for marriages or inheritance issues. The second one will be then the Islamic or the Sharia law, which you will come across particularly across the sort of Northern Africa sector. And Sharia law basically means, the translation of that means a clear path towards the water, which I think is quite a unique interpretation of that, showing that this is the law that will take you to the sort of fulfillment and nourishment that you will get. And then finally, Western law system, which I guess is more the sort of common law and the civil law systems, primarily based on the UK system and also on the French sort of civil law. So these are the main areas of law that you'll come across in terms of business on the continent. Now, in terms of the legal systems from that I've mentioned, the two in particular to highlight would be the Sharia and Islamic law, and then the sort of the common and civil law. So in general, and I say again, this is very a general perspective from the legal systems that you'll come across. Most the Northern African countries will have a certain element of an Islamic law applicable to it. Some a lot more prevalent, some will be a mix. So there might be a civil law aspect from the sort of French codified system of law together with Islamic law. Maybe a more general sort of French civil law system with certain aspects that will be particular to Islamic law. This is primarily due to France's history across the continent and their sort of long involvement across the Northern African continent. For example, the Egyptian Civil Code is essentially French law, but allows Sharia law as an additional source of law. So, you know, in certain areas where there might be a slight lack of understanding of certain principles which lack, that will be combined with Sharia law in terms of finding the final outcome. Algeria has kept the French-based system, and Tunisia and Morocco use a combination of the French law and Islamic law. If we move across to the more common law areas, I guess this would be more the southern parts, sort of sub-Saharan African countries, which follow more the traditional UK common law system. But again, as an example, in South Africa, customary law also plays an important part in terms of resolving disputes, particularly among sort of local areas where there might be civil wrongs between parties. The difficulty with this is when customary law is based more on the sort of communal perspective, where we have that particular aspect to look at from how does this affect the community, whereas when we have the common law sort of legal systems, which are more very particular in terms of the legislation, sometimes there might be a disbalance or an improportionate conflict in the interpretation of those laws. And that's always a difficulty to get around when trying to apply a combination of these laws. This is just a slide to show you, in general, what legal systems would be prevalent. when it references the Napoleonic Code, obviously that refers to the French sort of civil code. And Southern South Africa, Sub-Saharan Africa would be more the common law systems. Again, even from a language perspective, likewise, it would follow Sub-Saharan would be sort of more English, where the Northern African countries would be French, and Arabic towards the upper part. Now, Rule of Law Index, I think this is a very useful tool for companies looking to invest in a certain country to sort of get a basic understanding of what the rule of law is in the country. Now, if none of you have ever come across this, this is done by the World Justice Project, and it's a very, very detailed look at legal systems within the country. So to get the data and the stats behind it, they interview, I think, almost 200,000 households in terms of people living, and about 5,000 professionals from the legal sector, from the governmental sector, in terms of putting this together. Now, what it looks at is 8 different sectors which are very important in terms of understanding rule of law and its application within the country. So these are constraints on the government power. So basically, is the rule of law above the government? The absence of corruption, so how corrupt or what is the level of corruption within countries? The open government, so the transparency purposes for doing business and having information at hand. Fundamental rights, so are human rights protected within the area that you're doing business? Order and security, which is the enforcement of the laws on the populace. Regulatory enforcement, which is very similar to that. Civil justice and criminal justice. So again, are your problems or are your disputes going to be settled in a fair and very reasonable manner? So I think in terms of a world data stat, this is probably one of the most comprehensive and something to really look at if you're interested in understanding a little bit more about the state or the country in which you're looking to do business. I've decided to just take an example, and this is South Africa, just to give you an understanding of how it works and the sort of different parts which it looks at. It's very detailed in terms of its index, and it gives you a sort of a ranking from a global perspective. It gives you a ranking from the regional perspective, and it breaks it down into each sector in terms of where it is stronger in certain parts and where it's weaker. For example, if we look at the South African one, probably the lowest one on that would be the absence of corruption, which is probably below the world average. And again, traditionally that would be, if you know a bit of South Africa's history in the past sort of 4 or 5 years, there was an issue on the previous government with the issue of state capture, and that has a direct impact in terms of the putting together the data of this information. So I think it's a very detailed and a very useful tool to use when considering to look at African countries, to have a better understanding of where you're going and what sort of issues they are facing at that time. Again, this is a summary of the sort of African index in terms of the rule of law index, and I think generally pretty well represented. What I've done on the right-hand side is just to sort of put a comparison up with countries, and I've not singled them out for any particular reason other than, a lot of Korean companies do business with China, Vietnam, Turkey, and the overall interpretation is that often those countries seem to be a safer option, let's put it that way, for investment purposes. But if you break it down to the overall statistics and the numbers, I think African countries rate pretty well in terms of the overall manner from a safety perspective. So I think it's also good to get that out in terms of the ether for people to understand that when looking at business, don't look at perceptions, which there might be. I think there's a lot of potential and a lot more security than what people might have as a general sort of understanding. Moving on, in terms of the African Union legal implications, and I won't take too long on this, probably the 2 most important parts from this would be the African Commission on Human Rights and the African Court. They sort of complement each other in terms of the protection and the enforcement of rights across the continent. Again, the Advisory Board and the Advisory Board in international law, these organizations within the African Union that would advise on, new developments, maybe to update certain charters, etc. So these are the institutes that are most prevalent in terms of the African Union and how they go about their decision-making processes. I think 3 parts just to highlight. Again, I won't spend too much of this. I think the OHADA, which I've highlighted, is quite a unique sector where there's been 16, 17 countries that have signed up to this. And primarily it is to make sure that there's an almost uniformed legal system that applies for international business. Again, the main purpose behind this is to ensure security and to ensure stability in terms of what you will get when you are investing in those countries. So I think this is something which I think might be even expanded on as we go down the line, particularly with the new free trade agreement across Africa, because it'll give a lot more stability across the different regions and understanding, what will be expected. In terms of the consultative organization, the Asia African Legal Consultative Organization, Korea is a member of this. What this is purely a sort of organization which discusses legal issues and also uses those amongst the member states to implement policies, etc. So they'll discuss issues which range from cryptic cybersecurity issues, cryptocurrencies, ESG. So from a Korean perspective, this is an organization where if you're looking for certain assistance or advice or need them to help on certain policies, they'd be a good organization to talk to. Likewise, the African Legal Support Facility, this is run by the African Development Bank. And I think, listening to the bankers today with the KEXIM and KSURE and ABSA, a lot of financial plans are quite complex in terms of the way they get structured, particularly for projects and the way that we want to get the financing through. So, for member states that are struggling to understand the intricacies of this, this is a support facility which assists across that for understanding better to get the best sort of project structure in place for the project and for the financing thereof. For arbitration and disputes, it's quite interesting having a look at the statistics from the ICC or the London Court of Arbitration and Singapore Arbitration Center. A lot of the disputes will involve African parties and probably up to 20%. But when we talk about African arbitrators or people that are involved in the decision-making process, that's probably a 1% across the board. Now, understanding that trade is going to significantly expand, I think, in Africa over the next 20, 30, 40 years, particularly with the new free trade agreement, there's going to be a huge amount of business, but that means there will be disputes. So what I wanted to highlight here is that Africa has excellent facilities in terms of arbitration centers. And a couple of benefits for using Africa as the arbitration centers or as the seat of arbitration is numerous. I think one of them is obviously for enforcement purposes. So if you're seated in the country of the state where you're doing business, that'll be a lot more protective in terms of the enforcement procedure. A second benefit of that is the development of the African arbitration and dispute system, and also the development of practitioners, i.e. arbitrators and people that are professionals in this sphere. So I think that's a key point that I'd also like to raise today in terms of considering when you're doing business, rather than just selecting the usual London Court of Arbitration for the dispute process, consider the African institutes, because they really are excellent institutes and excellent practitioners in terms of this. Again, a lot of the countries have signed up to the New York Convention, so that helps, again, for enforcement purposes and following the arbitration route. And I think also, generally, if we look at the statistics, a lot of the governing laws are the traditional UK, US, German, Swiss laws. So when doing international business, more often than not, you'll come across these as the governing laws for your contracts, for whatever it might be. So for the financing, the trade finances, etc., the facility agreements. So it's not something that will be unusual or new for Korean clients. Again, these are some of the bigger and more used arbitration centers across the region. But again, I wanted to highlight on this slide that it's not just limited to those. So there's a massive amount of arbitration centers, and something that one should seriously consider when looking at doing investments into the continent. Then finally, I think these are probably the 6 or 7 points that I wanted to highlight when looking at doing business and asking these questions about the country where, or the state where you're going to invest into. So, does the country adhere to the rule of law? And I think that's important. Again, there are numerous ways to look at this. Like I mentioned, the rule of law index, getting professional advice, understanding in terms of organizations, chambers of commerce, the embassies. They will give you information into understanding this from a much better perspective. And what is the legal system? So what are you going to be facing? As we mentioned, there are a variety of legal systems. Is it the common law? Is it the civil law? Will it be the sort of Islamic law that might be applicable to the business that you'll be undertaking? Does the country have foreign investment protection laws? So are there free trade agreements? Are there BITs in place? Again, this is more from a perspective of protectionist. So if something does go wrong, will your investments be protected? And then I guess finally, I think also what contractual framework will be required. And this is, again, quite technical because it depends on the project, it depends on the financing, how it will be put together. So these are probably the critical parts which one will find when doing business across the African continent. But I think two parts. One, it's not just looking at the company that you're doing business with, but also the region, because it's very specific and very particular. So for those looking to do business in Africa, it's an excellent place to do business. And I firmly, from a legal perspective, do believe that across the continent, as the majority, it's a reasonably safe and very experienced continent in terms of the way that they go about business, because they know business coming to Africa is essential for the development of Africa. So having a solid legal structure in place is critical. I think that brings it to the end in terms of time-wise. It is Friday, so I hope you enjoy a good bulgum, which translated means a Fire Friday. It is Busan, so have a good weekend as well.
네, 티모시 디킨스 회장님의 발표까지 잘 들었습니다. 우리 한국 기업들이 이제 아프리카 시장에 진출할 때 어떻게 이제 아프리카의 기업 금융과 또 법률 시스템에 접근하고 또 활용할 수 있는지 또 사례를 통해서 좀 알아볼 수 있는 아주 의미 있는 시간이었다고 생각이 됩니다.
Seek for opportunities in Africa. So we are going to invite the speakers back on the stage for a Q&A session. And please come up to the stage. I would like to ask the speakers to come up to the stage, and we'll receive questions from online and offline. And we have already received a list of questions beforehand. So speakers, please take the seats on the stage. So we also have Managing Director Amant Naidu from Absa Bank of South Africa joining us online for Q&A. And from the floor, we would like to open the floor to the audience. If you have any questions, please raise your hand. Yes?
Thank you very much. These are very excellent presentations, and personally, I think I learned a lot. Just two quick questions to Korea Exim Bank and Mr. Dickens. Yeah, Dickens. The Korean Exim Bank, two questions, very quick ones. A very interesting slide about the trade between Africa and Korea, which has been on average very low, 1%, 1.8, 1% from 2016. That graph or slide is very interesting. Up to 2021, 1.4%. Would you maybe shed some light? Why do you think this is so? Why is it constant, even going down a bit from 2016, 1.8% to 1.4%? Why? And would you maybe give some, I don't know, advice how do you think we can change this, and which are the areas specifically from your experience that you think we can focus on to change this trend, which is, like you put it, regrettably, which is not very good? And secondly, why the companies in Africa who want to do business in Korea and borrow or get help from Korean Exim Bank, does it have to be through a government? Can they, as a private company from Africa, directly work with Korea Exim Bank without going through government? And Mr. Dickens, that was a very good index you showed there, one of 33 countries. One is the best index and 33 the worst, in inverted commas. I was a bit concerned. I saw Zambia there were a bit down in the index. So a bit of work on that. Very good data. I personally learned a lot. Thank you very much.
네, 잠비아
Thank you very much, Ambassador, for a great question. First, the trade between Korea and Africa, it's very, very low. And I can tell that how regrettable it is and why this is happening, and what kind of advice I can give to improve this, or in the future how I foresee this. Well, let me put it this way. Physically, the distance between Korea and Africa is really, really far away. And secondly, Korean companies advancing into Africa, some have achieved a great success, but their success stories were not shared among Korean companies. If had they shared the successful stories or best practices, then Korean companies will be encouraged to advance into Africa. So that is my advice, if they can share the best practices. And thirdly, compared to 2016, 2021, the trade has decreased. It's because of the COVID-19, especially the movement of the goods, movement of the people were very, very difficult. And because of that, compared to the Asian countries that is geographically close by, working or trading with African countries were quite difficult during the past few years. But in the future, as COVID-19 turned into endemic, I'm sure that things will improve. I dare to give you a few advices. In my view, African continent is great, but Korean companies need to share the successful stories. And second, when they advance into Africa, when they reap a tangible, a great result, I'm sure there must be some, right? And we need to make effort to share those successful stories with Korean companies. And last but not least, I hope that there are organizers or people who are very much interested in improving the relationship between Korea and Africa. And if you can focus on advertising the successful stories and how great opportunity lies in Africa, Korean companies will listen to that and pay attention and advance into African continent. Now, your question about if African companies like to work with the Export and Import Bank of Korea, must they contact Korean government first? Well, my answer is as follows. Not only the government, but with the companies, we don't have much work experience with working closely with the private companies. And of course, African companies directly contacting us could be one way. But in my presentation, as I briefly mentioned, please make sure to use re-lending financial product. That's the best way to do that. And there are also banks who are in charge of who does a lot of re-lending financial product, and that could be best way to contact directly with the Export and Import Bank of Korea. And usually, Export and Import Bank of Korea, we are working closely with a massive mega scale project. If it's the scale of the project is huge, then you can directly contact us. But Export and Import Bank of Korea and Korea Trade Insurance, we support only 85% or above 80% of the volume that we support. But if you need additional the remaining percent, then you need to work with the commercial bank. So in most of the cases, what they do is they contact the commercial bank who whose presence in Africa, and then you consult with the Minister of Finance and the Commercial Bank in Africa, and then they contact Export-Import Bank of Korea or K-Shore, and then we all can work together. So once again, if it's infrastructure project with a massive mega scale, and in that case, you can directly contact either Export-Import Bank of Korea or Korea Trade Insurance. If a private company with a small scale size, the best way is contact the bank responsible for re-lending financial product. Thank you.
I'm not sure if the question was probably phrased from the rule of law index, but I agree in terms of the rankings. Of course, it's always subjective to what information is being given throughout. And from my perspective, I think there's some value to be taken from it, but it's not a completely indicative perspective of what the current status is within different states. But none of us really want to be on the lower end of any sort of first in class, second in class. I don't think that's the purpose of that. I think it's just to give us a general understanding of what you might come across.
네, 다음 질문.
Next question.
Question is regarding the hedging as a foreign policy strategy. Like, what method we use for the survival of business, especially from the developing countries? I see, I'm asking this question because I see your examples most were on the corporations, but how will this hedging strategy help for the government? Because if we take the example from the first presenter, from the Exim Bank, shows some of these African countries are buying, they're importing and exporting, and it's very large goods, but they do not have intention of doing business. So how this hedging strategy help when these transactions are taking place?
예, 일단
Regarding hedging at the country level, well, the product that I have introduced to you is basically based on a guaranteed exchange rate. So within that guaranteed rate, the purpose is to reduce the exchange risk to zero for the trading companies. In all countries around the world, including Korea and African countries, the exchange risk is escalating greatly. But at an individual company or country level, it's difficult to do anything about the exchange rate. It's just a matter of how we can adapt to the changing exchange rate. At the national level, if it is possible, it is better to increase your foreign reserve and also sign swap contract for major currencies. That's the best way to hedge the risk at the country level. And second thing, for trading companies, the exchange risk can be covered through futures, providing the exchange rate related insurance similar to the one our company offers. So government supporting that kind of corporation supported trade insurance. There's not much we can do to manipulate the exchange rates. So all we can do is do our best to reduce the exchange risk within the areas that we can control. So did that answer your question?
She was talking to me, I'm sorry. Maybe it's an area for you to look into. That is what I'd like to advise, because most of African countries, they don't have large corporations that can do huge importations, but the government is the one that's doing business. So probably you can see where you can have a product to help the governments, especially after we have seen the COVID and the issues of transportations. It has taken longer, and some of the contracts have not been able to be delivered. I'm sure there are a lot of those cases.
Yes. So today I have mainly talked about the SMEs with a focus on SMEs, and at the country level, well, our corporation, it kind of is beyond our level of discretion or beyond area of our control. So, but in relations to the any challenges or inconveniences Korean companies can experience regarding the counterparties, well, the biggest problem lies on foreign exchange reserves. For Korean companies are most worried about African countries' foreign reserve, whether they have enough dollar or euro reserves so that the payment can be made in time. I've talked about short-term export insurance and other related products, and these products will alleviate the anxieties or fears of Korean companies in doing business with African businesses. Of course, it might sound too much if we ask you to increase your foreign reserve, but most countries, because of the rising interest rates, are more vulnerable to exchange risk now. So I'm cautiously talking about this, but in foreign exchange rate, the governments probably should try to increase their foreign reserve, especially for major pillar currencies. That's all I can tell you now. Because of the limited time, we'll be able to receive one question, and to Mr. Naidu from EPSA, we have one question that's been received for you. So I will ask a question to Mr. Naidu.
So we have received a question to you. There are existing relations. There are companies who made advancement into Africa and achieved a huge success. And there are also Korean companies who wish to advance into African continent. So they also would like to work with you, APSA Bank. And what should be their priority? What should be their things that they need to prepare in advance to be successful in African continent? Any advice?
Yes, thank you very much for that question. I think before I deal with the question itself, maybe just to touch on the previous question which was raised in terms of dealing with FX volatility and exchange rates which cannot be accurately predicted. So that obviously introduces a significant level of business risk when you're dealing between Korea and Africa. And one of the features of African currencies is the volatility. And we have seen many companies, African importers, as well as exporters, being able to successfully manage the exchange rate risk by engaging in things like forward exchange contracts tied to particular imports or exports. That then allows them to know what price the product will be landed at, and it will then ensure that they are able to manage their margins, their profit margins, and therefore limit any downside risk because of the foreign exchange volatility. So I just thought I'd offer that comment because I think it also addresses the question which was posed to me, that it is important to understand the risks associated with each of the markets that one is dealing with. And I think understanding the local market environment is very critical in terms of dealing in Africa. And things like local partners, strong financial services companies, your commercial banks can all go a long way in terms of helping you to understand the business environment in the different African countries. So, for example, for APSA, we're present in 12 countries. We have local management teams who are very willing to meet with Korean companies. They can advise them around things to look at and things to take into consideration in terms of dealing in those markets. We also have economists who do a lot of research on the macroeconomic environment, and we'd be very happy to share that information with Korean companies. I think I would also like to say that patience is very important in terms of building a business in Africa. It will take time to grow that business. We've seen many companies try to start off small and then build it over a period of time. But patience and taking the necessary steps in terms of understanding the environment, taking a long-term view in terms of commitment to building that business is very important. It's very difficult to do business in Africa if you're not prepared to invest capital for the long term. And maybe the last point I would like to make is maybe to consider partnering with local companies, using local distributors as a low risk way of entering into the local market, using that strategy to then understand what the local market is all about, and then finally going to a point where the Korean company is willing and able to invest directly in the African continent.
네,
Thank you very much. This concludes the seminar. The Korea Africa Business Financial Seminar was held, and thank you so much participants joining us virtually and physically. I sincerely hope that today's seminar provide you some help and productive information. That concludes the seminar. Thank you.